So today I want to talk to you about the big trucking rebound in 2024. Now, you know, if you've been in this business over the last couple of years, the trucking industry has experienced some really tough times. And I personally believe that's what it's about. You are going to have good times and bad times in any market. If you go to the stock market is up sometimes, it's in a bull market, and then sometimes it's down and you're in the bear market. And those investors that can go in and make money in any market, or I should say, sustain themselves in any market. Sometimes you're not going to make money, but you have to be able to sustain and maintain. If you can do that, then that to me is the sign of a true business owner, because anybody can make it and do really well when things are going great, right? Everybody can make it in those types of markets, but who can make it when things are not going so well? Who can buckle up your belt, tighten up your bootstraps when things are not going so well? Those are the true business owners. And if you've been making it through, if you've sustained, if you've maintained during 2022 and 2023, I want to give you a big shout out, a big pat on your back, because those certainly have been some rough times. So if you're still here, congratulations. But now we're starting to see that things are getting a little bit better. And we're thinking that 2024, according to the data, is going to be a much better year. And what they're basing that on is something called the tender rejection rates. Now, before we get into the trucking rejection index charts, and one of these charts will actually show us the bottom of the freight market, because we know in order for us to experience a rebound in any market, we have to see where the bottom is. But before we get into those charts, let's talk about supply and demand. And we need to talk about supply and demand because a lot of people use that phrase casually, but the people really don't understand what supply and demand is. So for those of you who may not, supply and demand very simply is supply is the number of trucks within that market that are available for dispatch, and demand is the number of loads tendered within that market. Now, we know we've seen an outsized supply versus demand. We've seen way more trucks available than there have been loads. So what that leads to is a huge number of trucks going after a small number of loads, which drive down price. Take a look at the chart I have on your screen now. This chart shows the number of carrier authorities that have been applied for throughout the years. Since 2010 up until 2020, the number of carriers applying for new authorities have hovered around the 2 to 5K mark. But as you can see, during the latter part of 2020, those numbers started to spike, and in 2021, they almost hit 20,000. But in 2022, the numbers started to come back down, and in 2023, we can actually see a contraction. As capacity continues to correct, the freight cycle could begin to move at a faster pace, perhaps by the end of this year or early in 2024. We're likely to see spot rates increase as capacity decreases and freight volume increases. Now, this next chart on your screen reflects the outbound tender reject index, or the OTRI. The OTRI tracks the balance of supply and demand in trucking by measuring the percentage of truckload freight that is rejected by carriers. A tender rejection by a carrier tells the shipper the carrier has more options for that particular truck. Higher rejection rates means that the supply and demand balance is starting to swing in favor of the carrier. Now let's take a look at May 14th on this chart. This indicates that the market hit the bottom when tender rejection rates were at the lowest of about 2.5%. Since that time, rejection rates have steadily increased to about 4.38% in September of 2023. This number is on track to surpass last year's tender rejection rate of 5.5%. Now, although this is great news for carriers, shippers having to pay an increased amount to move their loads in 2024, unfortunately, the news is not as good for freight brokers. And it has to do with the spread. You see, the freight brokers make their money on the spread. And the spread is currently 79 cents. And we're talking the spread, what we're talking about is the difference of what you'll pay to move a load or a truckload of freight via the spot market as compared to contract rates. And although the current spread is at record levels at 79 cents per mile, as spot markets start to decrease, so will the margins of freight brokers decrease as well. And anytime we're talking about decreases in margins, we're talking about freight brokers who are making less money. Now, the silver lining in all of this is that as those freight brokers start to make less money, the bigger freight brokerages, some of those traditional freight brokerages who have been over leveraged, start to fail. That's going to release more freight onto the market. So of course, if you are still here, you're surviving. Remember, we talked about sustaining and maintaining during this period. If you can sustain and maintain your brokerage, more freight will likely be on the market for you to choose from. So that's what I wanted to share with you today. I certainly hope this information has been helpful. If you want to learn more about the freight brokerage business, I'll leave a free link. It's in the description box. It's my 5-video series titled How the Load Movement Process Works. It shows me in office moving freight, talking to shippers and carriers to give you a better understanding of how this business works. And also, if you're ready to get your load board and you're looking for a good deal, I have a link in the description box that gives you 1 month free to Truckstop's load board. So in the meantime, I wish you the very best in your life and business. See you all the way at the top, because the bottom is much too crowded.